What's up, guys? Welcome to another edition of Market Marauders. Beating the market, one trade at a time. If you're new to Market Marauders, it's an investment channel to help you find the best deals in the market and find the best stock picks. So, if that's something you're interested in, make sure you smash that subscribe button down below, like, comment, and share. Also, down in the description, I do have a Patreon account, so I'll be uploading more information on Patreon, just a group of people getting together, trying to discuss more stocks in depth. So if that's something you're interested in, check that out. Also, down in the description, I have some book links, and these are affiliate links, so they do benefit the channel if you do go buy one of them. But there are books on investment that no, I didn't make about a lot of better investors out there. I think reading is paramount for new as well as veteran traders. So the more you can read, the better off you'll be as a trader, in my opinion. And that being said, let's dive into it. So my first stock for the options for the week is ticker sign J&J for Johnson & Johnson. Moving average 50 is 138.89. Moving average 200 is 135.04. And they ended the week at 141.23. So they've kind of been on a breakout, going up and up. I think that's going to continue to grow, but I don't think just looking at charts is actually true investing. I think true investing is actually going to look into the company, see how they make profits, and see how the company itself operates. To me, that's true investing. With that being said, I'd like to give some more background information on the company. Just current things that they're going through, just so people familiarize themselves if they don't know what Johnson and Johnson does or what they is going on with the company. So going to one of the press releases, it says Johnson & Johnson postpones 2020 medical devices business review due to the Roni situation. Says today announced in light of evolving situation with the Roni outbreak, it will reschedule 2020 medical devices business review that was planned to take place May 13, 2020. J&J will continue to monitor the situation closely and follow guidance of the health authorities to determine a future date. So basically, they're postponing this review, but I think the company's still going to be profitable. They're doing a lot of things to help find a cure. They're partnering with a lot of different companies, and their products are selling out on the shelf still. When this whole pandemic thing started, a lot of people went and bought their products, and I think people will continue to buy their products as time goes on. Um, just an overall solid company, and I think a good long term hold. That being said, I think call is probably the best option in this case. Now, if you're new to options, I personally just buy calls and buy puts. I don't sell calls or sell puts. So buying a call or buying a put, if you buy a call, it means you believe the stock is bullish, which means it's going to go up. If you buy a put, you think it's bearish, which means you think it's going to go down. And for one option is a contract to buy 100 shares at a certain price, which is usually this price on the right hand side. Now you have a strike price, which is the price you believe that your option is going to go to. So if you have a call, this is 150. That means you believe that the stock price by June 19th, which is the expiration date of this, will get to $150 and above. And then you'll be what's considered in the money. So in the money is everything down below, which means the price has gone above this 141.75. Anything above this line is out of the money, which means it hasn't gotten to this price yet. So these are all out of the money options. These are all out of the money options. These are all in the money options. For me personally, buy in the money. Out of the money options. I don't buy any in the money options. So that's just a personal preference of mine. And this price that you see on the right hand side is not a fixed price. So when the market opens, this price will change, and it is based on the share price, which is also based on the break-even price and percent change. So as these change, your price for the actual contract itself is going to change. All that being said, I think entry price between um, 150 to 170, probably be a good entry price for a call. I do believe it's not unreasonable to see this stock get up to 150 and above. I think 170 is a good cutoff. Now, if you're thinking about buying it, this price that you see, you're not going to pay 33 cents for the call. You're going to be paying $33 for the call. So your range, if you're going to go in at 150 strike price, and these strike prices don't change, so they'll be stagnant. If you're going to go in at between 150 to 170, you're going to be paying between $33 to $358 per contract. So anyone that tells you, you need to spend, save $10,000 and begin investing, it's not true. You only need like $33, which, in this day and age is like the average price for like a family of two eating out, if not more. So, just donate at one time and I think you'll have that money to buy that option. But, it's all about different prices for different people and risk management. So, somebody who $33 may be still expensive for some people and not for others, just like $358 may be expensive for some people and not others. It's all determined on you and your personal risk tolerance and how you do your risk management. So if you have allocated, certain amount of money set aside for investments, then $358 may not be that much for you. Um, as likewise, if you allocated some money, $33 may not be that much for you. Um, just depends on the investor, and just your particular taste and how you want to approach that. Um, so my second number two is going to be ticker sign JPM, and that's for JP Morgan company. The moving average 50 is 110.34. Moving average 200 is 117.68. And they're kind of on a bounce back. They ended the week on Thursday at 102.76. And they will be giving their first quarter 2020 earnings on April 14th. So next week they're going to be giving their earnings. In my personal opinion, I think it's going to be pretty positive. I think it's going to be pretty good, especially with all things going on with the stimuluses and bailouts and stuff going on. There's a lot of stuff, swirling around in the market. I don't have enough time to explain everything that's going on, but I think J.P. Morgan Chase company is going to, benefit from it. A lot of the things that are going on, and I think, it's going to yield them to be have a positive earnings. So with that being said, I think a call is the best option. June 19th, just like the previous one, I think it's a good date. And for the strike price, I think between 110 and 125 is a good entry. So you're looking between if you're buying a call for this, you're looking to pay between $184 and $575. Now, like I said previously, different risk managements, different accounts. This may be expensive to some and not expensive to others. It just all depends on you and your risk factor for how you invest in your accounts. My goal is just to point you in a direction and to show other retail traders that it's not as expensive as some may have seen. Now you may be wondering what trading platform is this. This is Robinhood. If you're not familiar with it, I do use Robinhood, even though they've had their previous plunders or previous problems in the past. It's the only platform I've used, and I kind of like the way it's laid out. It makes the most sense to me. I may be switching to one in other one in the future, or just adding another one in the future, but I haven't at this point in time. So all my references are going to be from the Robinhood app. So if you guys are wondering what this is actually Robinhood app, and this is how I'm going about doing my options. Now, if you have the Robinhood app, you can go and sign up for options. Just go into your account and then go down a little while and it'll say, sign up for options, which you actually do have to sign up. So just downloading the app will not let you sign up for options. You actually have to go into your account settings and sign up for options. Now, I do have a link below if you guys want to sign up through that link for Robinhood. You know, that would be nice. But or you can just go and download the app on your own. It's free. You don't have to pay anything for it. You don't pay anything for trades. So I like that about it. That it's free. So going into my third pick for the week, I'm gonna have to say ticker sign XOM for Exxon Mobil Corporation. If you guys have been following anything in the news, you've seen that the Saudis and basically Russia are basically were at a war between gas and oil prices, but I think that's kind of simmered down. I think they've come to an agreement, or it seemed to be that they've come to an agreement. Who really knows at this point the way things work out? But the moving average 50 is 48.11, moving average 200 is 63.64, and they ended the week at 43.13 on Thursday. Now going into some background information on ExxonMobil, we can see ExxonMobil reduces 2020 capex by 30%, cash OPEX by 15%, maintains long-term outlook. So it says capital investment in 2020 are now expected to be about 23 billion, down from previous announced 33 billion. A 50% decrease in cash operating expenses is driven by deliberate actions to increase efficiencies and reduce costs, and includes expected lower energy costs. So they seem to be trying to cut costs to save money, which is always a good measure for any company. I think can make the company yield profitable. Also, um, amidst the pandemic situation that's going on, it wouldn't be a bad idea for a company to, cut costs and try to save as much money as possible. And also with the whole, um, Saudi and Russia situation, once that's solved, I definitely see ExxonMobil, going back up to be, more profitable. So um, that's why I say a call is probably the best option because I definitely see them raising their price rising in the near future. So June 19th, and you might say, why do you have June 19th for all of these? I just think it's a good time period. It gives you enough time to see how things develop. A lot of people have like calls; they'll just go week by week on calls and puts. They'll just have one like, okay, this is one for next week. This is one for next week. And this video, yes, is a weekly video, but I think having this time interval kind of gives you a cushion to see how these things will play out because things that happen in the news take time. Companies changing take time. Um, just a lot of things corporately take time, and then also having the stock reflect those changes take time as well. Now going into ExxonMobil, I think a strike price between $50 and $60 is probably a good place. And that's this interval right here. So you're looking to pay between $17 and $138 per call. They ended at $44, so I think $50 and $60 isn't that asking too much of that. Um, Also considering the fact that their moving average 50 is $63.64, and their moving average 50 is $48.11. So this will be basically saying that it's going to go up. It's gonna go up back to above its moving average 200, which is not too much to ask for a company to do that. Um, Now, if you buy these, you're looking between to pay between $17 and $138, so a lot cheaper than some of the other ones that we've seen. And $17, not that not as expensive as some of the other ones. So for you all who stayed to the end of the video, I have a bonus number 4 pick for the week. So let's dive into that. So that's going to be ticker size CCL for Carnival Corporation. Now, if you guys would notice, Carnival kind of had a bounce back. They basically fell down, tremendously, bounced up a little bit, fell down, and now they kind of have bounced back. They're starting to bounce back up. Um, to me, I don't think that's going to happen that long. I think it's pretty short lived. I think they're going to go right back down. And that being said, given this is from the CDC. The CDC basically extended the time that they're going to have um, ships ported, which means they extended the time that they're banning travel for cruise ships. So that being said, if cruise ships can't sail and they're being banned by the CDC, is actually operational, then that means they're just sitting at port, and it also means that the companies aren't making any money. So I think once people realize that that's actually happening and that's going to be a thing, then I definitely see the company stock going back down from the 12 that it was at. And that being said, I think a put is probably the best option for this stock. Now, they are currently at $12.42. Now, I think a good range for a put would be between $12.50 and $5. So you're looking to pay between $48 to $310, and that's going to be your range for your puts. Now, $5 is kind of a stretch. More realistically, between 12 and 7. But I think it may get close to 5, depending on the impact and how long this is going to actually last. Anyways, I do have a Patreon page now, so check that out down in the description below. If you like this video, like, comment, and share. Give it a thumbs up. Help the YouTube algorithm, so other people can find my videos. And good luck to you all trading out there. There's still deals to be made in the market. You just got to find them. And good luck to everyone out there trading. I hope you all see good profits in the upcoming weeks. See you guys next time. Peace.